Or we've got a rally in global equity markets. As US Q2 earnings start to ramp up, it's a massive day for European assets as we look at the ECB meeting, Nord Stream 1, and other factors as well. Blake and I preview that situation. And with gold trading $1,700, we ask, is now the time to buy? We go inside all these factors and more as we assess the trade-off. Hi there, my name is Chris Weston. I'm head of research here at Pepperstone. I'm going to be joined in a second with Blake Morrow from Forex Analytics, and we're going to be going through all the setups, the thematics, the views, and the news that's making on mine and Blake's radar at the moment. As always, if you could hit the like button, if you like what you're hearing, do so. That'd be great to see. If you've got any questions, leave them in the comments field, and Blake and I will get to them as soon as we can. We're going to be covering a lot of the factors that are going through global markets, and I'm sure everyone has a strong opinion of which you're getting amongst the community is a good thing to do. So yeah, if we could do that, that'd be awesome. But we look forward to seeing more of you on the show today. Anyway, I'll bring Blake into the program. Blake, how are you, mate? I want to have a quick talk about Elon Musk. I saw him partying on the boat this week. Very, very translucent. The guy clearly needs to work on his suntan. But I'm guessing you were on that boat. I guess you were partying hard. Did you take any of the stock tips to trade Tesla today?
Yeah, I did, Chris. And actually, I dumped all my crypto yesterday before today's earnings. I'm just kidding. But boy, oh boy, man, the pictures of Elon Musk and compared to Jeff Bezos, two completely different looking CEOs, I would say.
Yeah, that's right, mate. Well, I'm in no position to be fat shaming anyone, so I won't go there whatsoever. But let's also remember that we do take our commitment to SEC regulations very, very carefully, and obviously we don't want to talk about front running or anything like that. So that's a very serious matter. But anyway, let's go into topical thunder and let's see what's going on through the markets this week. Well, Blake, I want to talk about sentiment because we're going to talk about the ECB in a second. There's a lot to really unpack in Europe. It's not just the ECB, but yeah, we've seen a nice rally in global equity markets. You've seen small caps outperforming. The Russell 2000 at the moment looks absolutely golden. Yeah, we've got a really nice setup. It's broken its recent downtrend. It's made a higher high. The Nasdaq something similar. We're going into earnings. We've seen about 13% of S&P companies coming out. We've seen 71% beating. Those that have beaten have done so by an average of 4%. 58% have beaten on revenue, and next week we get 51% of the S&P coming out with earnings. Now, everyone's expecting consensus earnings to be chopped up effectively, and that potentially could mark a more sustainable low rather than this trading move we've seen at the moment. We've got bond volatility has subsided as we go into a Fed meeting next week. We've got the VIX trading 24%. Commodity prices seem to have stabilized. The word recession seems to have sort of come off the boil. Sentiment seems to have improved a little bit. The question I'm going to ask you, Blake, of course, is whether that is sustainable or I think we get another downturn. How are you reading it now?
Well, it's a great question. And, we've talked a lot about sentiment actually over the last several weeks and about how bearish it's been. And maybe it's a little too bearish. And there was a good tweet. And just so you all know, I probably spend like 0.5% of my day on Twitter. I glance at it. I look. See if anybody's tweeting anything interesting. Then I'm back in my charts, back into the markets, back with our community. But I did see, I ran across a really interesting tweet that said, I'm bullish because everybody's bearish. and I'm like, that pretty much sums it up. You got the whole world's bearish. The market's starting to turn. Sentiment seems to be improving. And, sentiment is one of those things that it can really carry. And all we need now really is when, you get some news, maybe some headlines, maybe something with Gazprom tomorrow, maybe with the ECB, maybe with earnings that really propel the markets higher. We really haven't had a good, solid short squeeze in this bear market, Chris. And that's something that I think has been very absent. But the one thing that I do want to say is it's exactly the opposite of where we were last year when the markets continued to grind higher. We would say, oh, is there a top? Maybe this is the top. You'd start to get a little sell-off, and then all of a sudden the market just rips right back higher to new highs. Yeah. This is a similar type of situation. It's very bearish. We're in a bear market. Sentiment's very poor. It's obviously starting to turn a little bit. but I'm hesitant, just like anybody else.
Mate, did you see? You obviously look at like things like the commitment of traders report that comes out every Friday for you. Yeah, so it's positioning as of Tuesday, of course. But did you see the S&P futures net position? Yeah, the market hasn't been this short for a long time. So maybe you could make an argument that there's some of those shorts that are coming out of the futures market have taken some off the table. Yeah, I think the market's about to flip to a positive gamma position as well. I think, I think that contrarian view that you had there is quite an interesting one. I think we've still got some scope to squeeze higher, but we'll see what happens with the ECB tonight.
I think we do, and I think the 200-day moving average may seem far away, but it's really not that far away, especially if you're talking about the S&P. But we're going to talk about other indices. But first, let's go to the ECB, Chris. So
it's the big one. It's the big one.
It's the big kahuna. And, let's talk about, ECB. What are they going to do tomorrow? Do they do only a 0.25% or do they do a 0.5%? And this is a big question. And I think there's a lot of moving parts with the ECB, in the next 24 hours. And you brought up a great point last week, talking about tomorrow with the Gazprom Nord Stream pipeline. Is that going to get turned on? So there's and is it going to be in limited capacity or is it going to be in full capacity? Do they have the mechanics straight? And does that decision influence the SMB, the ECB in September? Does that influence them? And we have to look past what happens tomorrow. So I think there's a lot of moving parts, and I personally think that the ECB should raise rates 0.5%. And the reason why I say that is because every other central bank is aggressively moving higher, just like the Bank of Canada last week. I think this is an opportunity that the ECB needs to seize regardless. And if they don't, and we have this knee-jerk reaction of a lower euro following a 0.25 point, rate hike, I think you actually have to be a buyer, because I don't think Russia is going to purposely hold back the Nord Stream pipeline, not at this stage in the game, not heading into fall. And so that situation should improve, maybe slowly, but it's also the ECB will have, extra ammunition to go maybe even more aggressive in the September meeting. So what are your thoughts with the ECB going into tomorrow?
Well, I think you covered it pretty well there, mate, to be honest. I think you raised some good points, and I think they need a stronger euro. They definitely need a stronger euro. If you look at the balance sheet, which has now stopped growing, it is actually growing. The balance sheet is actually, the ECB's assets is growing because of the euro weakness we've been seeing. And that's, again, feeding full circle into further European weakness, and that's propelling inflation higher. So I think they need a stronger euro, and whether they get it is another thing. So, yeah, look, the market's pricing 36 basis points of tights for what is our night tonight, your tomorrow. I think they only go 25 myself, but it's a line ball call. Of course, you've got Mario Draghi, who's going to resign at some stage tonight as well. He'll step down. That means that the BTP Bund spread becomes even more important. If that was to blow up to 240 basis points that we saw the other day, then the euro's going down on the back of that as well. And that makes this anti-fragmentation tool, which they'll probably announce tonight in some capacity, even more important. The Nord Stream 1, look, I think they turn the taps on, whether it's 20 or 40% is one of the two, but I think they will turn it on. It's one of those things. If you tell me, if we were to see this tomorrow and know all the, and actually, if you were to tell me what was going to happen tonight with all the outcomes, could I make money from that situation? I can't categorically say I would be able to. So, look, I think volatility is the name of the game. If you look at implied vol in euro, it's massive. Everyone's expecting movement. That means take your position size down, trade below to stop, just know when you're wrong, get out of the trade. The market's expecting movement. But I think they only go 25 basis points, and I think, therefore, there's probably more downside risks. I think the ECB should be hiking. I think they should be looking for a stronger euro here. We'll see what happens. Anyway, I want to touch on the NASDAQ, mate, because I talked about the Russell, and the Russell's broken out. Whether it's sustainable is another thing. But everyone's in love with big tech again. It seems to, it's found its mojo after obviously being in the doldrums. Now, next week, we get the mega cap companies coming out with earnings. And, that means that the weightings that are on these names means that there could be some big volatility playing through in the NASDAQ. And for us as a trading shop, we see more business in the NASDAQ than really any of the other indices. We see a lot in the Hang Seng and also the DAX as well. But generally, the NASDAQ's the one that everyone loves to trade. I personally think after the recent breakout of the June highs that, we could be looking at sort of 12,900, maybe 13,000. But obviously earnings next week are going to be the big driver. How are you seeing the US equities and specifically in the NASDAQ here, mate?
Well, first of all, I agree with you. And I think that the NASDAQ actually will lead the charge higher as we go higher. The 13,000 level is actually the level that I'm looking at. I call it the line in the sand, and I have for years and years and years with our traders. It's like, that's the line that, says, am I bearish or am I bullish? And we get above 13,000, I start getting bullish, like squeezy bullish for the NASDAQ. So and if you really focus on the chart pattern, and I know we don't have it right in front of us, we're mimicking a similar move that we had a few weeks ago, right to the day. So if we break that pattern and we really start to see a rally going into the end of the week, I think it could extend itself. And, this talk that we're having about, potential short squeezes. I mean, I look at like stocks like Netflix, looks promising for a big bounce. I know they just had earnings and it was down a little bit post-market, but still, it looks squeezy, and so does Amazon. I mean, Amazon actually looks squeezy too.
Well, they had a big night last night. They were up nearly 4%, and that's obviously pushed up the discretionary space in the S&P. But I mean, for the Netflix ones, I mean, it's a pretty simple business model. I mean, the market hated it, to be honest. And again, it comes to a contrarian view, but simple business model. Netflix, you've got to come up with a decent pipeline of content. I don't know, the grey man looks like it could be a winner for them. That's the big ticket item that they've got. And if the market seems to think that that's going to work quite well, then maybe there's some upside. But they are seeing an increase in subscriber numbers coming forward. They're well below expectations for Q3. But it's not just them. I mean, if you're looking at the NASDAQ, it's your Apples, it's your Microsoft, it's your IBM. These are the names that you need to be looking out for. And I think that they've all come out and they've suggested they're going to slow the pace of hiring. They've all talked about the pace of the US dollar as being a major hurdle. I mean, how much have you taken out of that? Corporate treasury departments, hedge your dollar exposure a little bit better. I think is probably the way you got to be looking at that, right?
Right. Well, going back to like your dollar exposure, I'm going to actually talk, and I know we're both going to talk a little bit more about the dollar moving forward. And I think a good way to kind of parlay into that is precious metals. And I'm sensing, just because we haven't had this discussion yet, but we might be on opposite sides here. But I want to talk about precious metals because I think it's important. Everybody wants to buy gold, and let me get one thing out of the way. The price action in gold has been absolutely horrendous as of for the last 6 months. It's been horrendous. And I know every gold bug out there, it's driving them crazy. They don't understand why are we trading below 1,700 in a high inflationary environment? And I was even having a conversation with somebody in my community today about gold being that he's like, gold's the anti-fiat. And I'm like, no, it's the anti-dollar. And gold and the dollar have a very, very inverse relationship. And I think one of the big one of the big headwinds, for gold bulls has been this insatiable strength that we've seen in the dollar. But I personally think that the dollar has peaked, Chris. I think the dollar...
He's the brave man today.
No. I know them's fighting words, but I mean, when I say peaked, I say peaked near term. Maybe not long term, but here over the next few weeks, I think that the dollar you can play both sides of the trade, and I think that's actually going to set a bid in gold. But I got to ask you, what do you think about gold? What do you think about precious metals? And I have to mention, silver is at a 618 Fibonacci golden fib on a weekly basis, holding support pretty strong around the 1830 level. What do you think about precious metals here? Should we buy them for a tactical bounce? What do you think?
Well, look. As part, I run different systems, and one of the systems that I run is a momentum and trend following system. I combine both of the two. And right now in that system, I just wouldn't be doing anything other than being short in gold because everything's rate of change. If you're looking at the 3-day exponential moving against the 8, it's going down. They're in alignment. There's a number of other sort of inputs you use, but it's trading lower, and therefore I'd only be short in that or buying pullbacks until the rules change. That said, if I take a more sort of holistic view and look at other strategies, one that I look at is the distance that gold has relative to its 50-day moving average. And that's over 6% now, which, to put in perspective, since the last sort of 12 years or so, is about a 2 standard deviation move. Every time we've seen that distance move that far away, that has been a fantastic buying opportunity as a mean reversion trade. So if I put my mean reversion hat on, when we see the distance between the price and 50-day moving average going sort of 6.5% or over 2 standard deviations from the long run average, it has been a good mean reversion trade, and we're very close to that point. I think if we get down to 1680, that would be the point that you'd be looking to start averaging into maybe some mean reversion positions. But at the moment, the price is going down, so I think we're probably more likely to get 1680. So it's a tough one, but I am looking at one of my favorite contrarian indicators, mean reversion tools, which is that distance. So yeah, I think that's a really interesting one there. So the time is coming, Blake. At the moment, I'll be short though, for sure.
Okay.
All right. Anyway, I think we're actually going to cover this in one of the trades of the day. So let's first, before we get to that point, let's go to some of the charts that are on our mind, and that's a setup. So I'm just getting carried away with the music there, mate. Let's have a look at the chart of CADJPY. I want to bring up CADJPY because we're saying this just before the Bank of Japan's coming out, and it should be a fairly uneventful Bank of Japan meeting. I don't think anyone's really expecting anything from the yen. What we've seen though, Blake, in this market is carry working again. So the idea of being long currencies where the interest rates, the central bank's looking to put up interest rates, and obviously using the Japanese yen as your funder. And as long as bond yields are going up, then you do tend to see, the Aussie, the CAD, the dollar working well against the Japanese yen. But this is a chart that a couple of my clients have just brought to my attention. And I was looking at the breakout that we saw in CAD yen, and they said, well, actually, no. If you look at it on a wave perspective, you can see we're potentially getting up into the fifth wave, which could then see us a more sort of prolonged move down into, say, the 100 level. I personally love buying breakouts. Like, you do get us stopped out a lot. That's the problem. But so you're looking for those outliers. So when it kicks on, you're looking for 5R, for example, but you will get what we call a positive skew. So you're gonna take a lot of very small losses, but when it kicks, you've got to be looking for those to let it run effectively. So this is an interesting one. The momentum trader, potential trend trader in me suggests, if this does break out, you go long and just let it ride on the breakout from this point. But then we've got a few of the wave guys who are saying that this is ready to sort of pull back within that fifth wave there. So how would you see this right now?
Well, first of all, the Canadian yen is breaking out higher, but and it's interesting because the way my candles reset are probably different than yours, being that I'm on the other side of the planet. And I actually saw a spinning top today on the daily chart. And so if we had a down candle tomorrow following the end of North American trade, it would actually be an evening star formation, false breakout. It would be a reversal. But I'm not ready to step in front of that yet. And I'm gonna say if my name was Miss Watanabe, I would be a little upset that you're trying to trade yen on the long side just yet. It might be premature. However, it might be setting up, and I would look for, if we get a reversal tomorrow, I might actually be a yen buyer, and Canadian yen wouldn't be one of those false breakouts. Maybe not a bad reversal.
It always makes me laugh if my wife, or he's never really traded before, was listening to some of the banter in this thing, evening star, spinning top. She goes, what are you talking about? Anyways, it's another language, isn't it?
Did he just say Miss Watanabe? Who is that?
Yeah.
Anyway, all right.
Oh, we live in.
Yeah, let's turn it over to the Euro Aussie. The Euro Aussie has actually been a pretty good short for me when we broke down out of that wedge from a couple of weeks ago. We are nearing some pretty key support, and obviously with the ECB tomorrow, this is a big one, and it's a big pivotal level that I'm looking at, which comes in right around the 147.20 or 30 level, depends on what feed you're using and where that support is. But it's nice horizontal support. It's a fib. It's a 618 retracement. And, I happen to be an Aussie bull, and I know I talk a lot about it, about being a buyer in the Aussie dollar, Aussie US dollar, below 67 cents, 68 cents. Those are places that I like to own it. And I have been personally long the Aussie dollar, but I think that the Euro Aussie is going to pivot off of this area. But if we get a breakdown and we get a solid breakdown below 147, I think the euro is actually going to, take a nice little downtrend towards those trend lows. But the flip side is the euro could get a boost tomorrow, and I'm not going to ignore the fact that could happen. So this is a good pivot area for me. It is a setup, and it's the euro Aussie, and I think it's going to play. I could play on the long side or the short side. I have no position right now, but I like it as a setup. What do you think here?
I think no position's the right position for me at the moment.
Right.
I'd like to see a break of the 100-day. I don't think you've got that on there, but 149.09 is the 100-day, and that's really capped the moves in this consolidation zone that you've been seeing for the last week or so. The 100 days really capped at any kind of rallies. I'd love to see a close above that to push me into a more sort of momentum position, strength breeds strength kind of thing. A body in motion stays in motion. I'd like to see a close above that. That said, I'd like to see a close below, where the range lows at the moment suggest we are going to start bear trending. Next week, we do get Aussie CPI numbers. That could be quite key. I think the RBA Governor Lowe's been talking quite positively. There is the open for a potential 75 basis point hike at the next RBA meeting. I think they'll only go 50 personally, but that CPI number next week could be a big one. So I think it's make or break. It's a great cross to look at because, I think something's going to happen soon. And when it does, I think we just need to be prepared to trade it, because I think it's just consolidating like a coiled spring, ready to go bang. And I think you follow that move when the market tells you so. So that's what I'll be looking at. Talking about moves, let's have a look at Bitcoin, because Bitcoin for me has got it right. They have actually been leading the equity story as your ultra sort of liquidity beneficiary, sort of this idea that rate hikes have been somewhat coming out of the market, this aggressive hiking cycle, which is still going to happen. People are sort of sensing the idea that perhaps we've hit peak terminal rate, perhaps we've hit peak inflation. The worst is in the market at the moment. I'm not sure if that's necessarily true, but you have seen Bitcoin, which has been, it's one of the trades that I put out last week, has been consolidating in a tight range, and it loves doing this. It loves having a move. It loves consolidating. It has a move, it consolidates. We've consolidated for something like 35 days. We've broken to the top side. We've seen, the 3-day crossing the 8-day exponentials. So the momentum indicators are there. You've seen the rate of change moving up. So as a momentum play, it's broken out. It's done all the right things. The question now is, will this kick up? Will this kick on? Will it start to trend? We've had the momentum move. Will this actually start to trend? With trend following, of course, we know we never know it's going to happen until it's actually doing it. But you've got to be in the trade when the hallmarks start happening. And as of the moment, this has been a momentum move. Can this turn into a trend move, which we need to be part of as part of our system? What do you think, Blake?
Well, let's not forget, Chris, that the highs from 2017 were at 20,000, 19,600, something like that. And, for all intents and purposes, we held it. I mean, yes, we dipped down into the 17 handle, but after we've been consolidating above that 20,000 level. And so really from a technical perspective, it's at really key level of support. Now, will we break down eventually? Perhaps. Maybe,
yeah, right.
But right now, look, I think it's a good setup, and if risk takes off and we see the NASDAQ 100 break above 13,000, I mean, if Bitcoin may not lead the way at that point, maybe it's the NASDAQ, but it's going to move in tandem with risk. And so if we see a bounce in risk this summer, why wouldn't Bitcoin go see 25,000, 30,000 again?
Open mind. It's what I say all the time. Everyone's bearish. Everyone thinks we're going to see another downturn. It may well happen. The tape will tell us. Be prepared to trade it on the short side if we see that. But you know what? If we do get a move into 13,000, no one believes that. Just have an open mind. As a trader, we've just got to be open to price action and trade the tape that you see. And that means.
Speaking of having an open mind, let's turn it over to Crude,
right.
And I'm going to call it Rude Crude because Rude Crude. It's all over the map. But I'll tell you once again, and I'll say it here, and I'm the self-proclaimed probably worst crude trader around. Although I'd make good calls, and remember when it was trading around 110, I said it was a great short. It slipped all the way past the 200-day moving average, and now I think you got to be looking at it on the long side. And I know it's not going to make consumers happy, but it actually might be moving with risk a little bit. And I think if you just use your imagination and you be open-minded, Chris, we might be setting up an inverted head and shoulder pattern if we can pivot off that 618 retracement just under $96 a barrel. The head would be the low that we created below the 200-day moving average, the false breakdown. So if we can hold around $96, $95, it might be a nice bounce right back to 104. And if we break above 104, then we're going to be trading back in the 1-teens again. So this is a setup. And for those of you that like to trade crude, remember, I'm not going to trade it. I'm just going to call it. And I think that if we can hold around $96, $95, I think it might be a nice, good risk reward long, keeping stops below the 200-day moving average, targeting for 104, maybe even 1-teens. What do you think here, Chris?
Well, I'm going to take the other side of that one, Blake. Yeah. I get the situation that, you know, if we do see risk continuing to work, equities moving higher, then probably crude would go along with that. Obviously, a lot really depends on what happens with the dollar. And also admit that what we saw last week was very bullish indeed, in the sense that we held the 200-day moving average, we held those March, April lows, the range lows, and the market had a nice reprieve. But I actually said that we're starting to see rollover again. I think we go back to test that 200-day moving average, and it might not be so fortunate this time, and those buyers may give up. So I think, you know, I'm open-minded that if it goes into the 100-day, the 200-day moving average at 109.45, you know, that could be a level that could be very bullish indeed if we break through. But I think after a bit of a short covering rally that we've been seeing into that 200-day moving, I think probably we're going to go and see that being retested at the moment. The one that we're watching, of course, in the energy complex is European natural gas prices. That's the one that you want to watch as a result of Nord Stream. If they were to, you know, if the market was very disappointed by what I heard there, and we were to see that pushing into 200 euros per megahertz, well, we're about 153 at the moment, 156. That could have massive implications for European assets. It would be deeply negative. So, yeah, I think we keep our eyes on crude, we keep our eyes on US gasoline and nat gas. But the energy one you want to look at without any kind of shadow of doubt is European natural gas prices. If they were to go higher, the euro's going lower, and obviously that could play into other things. Anyway, so let's have a look at play of the day. Let's see what's the one that we're looking at most closely. I was feeling quite rock and roll there, mate. I want to talk gold, mate. We talked about gold earlier. Now I want to continue trading this. I sort of gave a bit of away. I want to trade this down to 1680 at the moment. There's not a huge call, to be fair, but you know, I like to sell things that are weak. I like to buy things that are going up as one of my main strategies. And I think right now the stars are aligned. You know, maybe that means that we're going to have to see a stronger US dollar continue to play through. We'll obviously see what happens in the ECB meeting in the session ahead. Next week, we've got the Federal Reserve meeting. Again, that's something that we are looking at very closely. We're looking at real rates, which have sort of stagnated a little bit at the moment, but they've been very influential on the gold price as real rates have moved up. We've seen the gold price under pressure. But most importantly here is the trend that we're seeing. Until that 3-day can cross back over at the 8-day, we can close above the 5-day exponential for one of those kind of metrics. I think that the path to least resistance in gold is the downside. I can have a look at 1 week implied put volatility relative to call volatility and see it only 1.5 folds premium. So the market, I think there's other things that say pessimism is there, but it's not extreme yet. So I think we trade down to 1680, where I'd actually be looking to flip those positions then.
All right. And, Chris, I have to mention this just because, you obviously we work together and I love this chart. And I have to admit that gold is very, very bearish. The price action is. But that 1680, 1675, those are those lows from 2021 twice, right? If I'm not mistaken.
Yeah, right.
Big support. Big support. Yeah. Just a couple things
see
to
it down
note.
there. I'll see you down there.
Yeah. I'm sure you'll see it down there. All right, let's take a look at the US dollar and Norwegian krona. And this is knocking crown. This is, as I mentioned to you before, Chris, and I mentioned to everybody, I believe that the dollar has peaked near term. And we're seeing a reversal. This is actually ascending wedge reversal in the US dollar and Norwegian krona. We had a false breakout above the wedge top. We reversed, and we're coming into that 972 level. That's a 618 retracement. And I believe that this is a good way to express kind of a euro trade, especially if the euro does get a bounce. Then the US dollar and Norwegian krona will come under pressure. But if the euro does sell off, the US dollar and Norwegian krona might not move as much as, because you see the move in the EURAUD, not necessarily the US dollar NOK. But I like this pair. I actually shorted some more today at 10 in North American trade. I've got a position running, and I'm actually looking for 972, quite possibly as low as 950. And like I said, I think that the dollar is peaked near term. Doesn't mean it's long-term peak, but I think that you can play both sides of this trade. And I think the US dollar and Norwegian krone is how I want to express that right now.
Good man. Well, you might not be the best crude trader, but you're doing it through the FX markets in the NOK there. So interesting one. You stick to your strengths, mate, and you play. You put your flex on hard there. Anyway, that's all from Blake and I. If you get a chance to put a comment in the field, love to see those. Hit the like button if you can. And you know what? We'll be back more for next week with more of the trade off.